Gold prices took a wild ride this past week, leaving many traders wondering what's next. Let's break it down. We saw a huge spike in gold, pushing it all the way up to $4,335 an ounce. This was a classic reaction to the latest jobs report, which initially looked pretty weak. The headline number suggested a slowdown, and the market immediately started thinking the Federal Reserve would have to cut interest rates sooner rather than later. Cheaper borrowing costs usually make gold, which doesn't pay any interest, a much more attractive investment. But then, just as quickly as it shot up, the price reversed. Why? Because once traders dug into the details of that jobs report, the picture wasn't so simple. Yes, unemployment ticked up a bit, but other parts of the report, like hiring and wages, were actually firmer than expected. On top of that, we got data showing retail spending is still surprisingly strong. People are still out there buying things, which suggests the economy isn't hitting the brakes as hard as that initial headline number made it seem. This resilience poured some cold water on those aggressive Fed rate cut expectations. If the economy is holding up, the Fed has less reason to rush into easing monetary policy. As traders unwound their initial bets, gold pulled back below that key $4,300 level. It's a classic case of buy the rumor, sell the fact, but in this case, the fact turned out to be more complicated than the rumor. The market is now reassessing just how dovish the Fed will actually be in the coming months. Of course, we can't forget about the geopolitical situation. Global uncertainty is always a major driver for gold, acting as a safe haven asset. While tensions remain high in several parts of the world, there was a brief moment of calm when it seemed like peace talks between Russia and Ukraine might gain some traction. This temporarily dampened some of that safe haven demand for gold. However, those talks have since stalled, reminding everyone that the underlying risks haven't gone away. So, what's the takeaway? Gold is caught in a tug-of-war. On one side, you have persistent economic strength that might keep the Fed on hold. On the other, you have ongoing geopolitical risks that could send investors flocking back to safety at any moment. It's a complex environment, and we'll be watching closely to see which force wins out. Make sure you're subscribed so you don't miss our next update on the precious metals market. Thanks for watching.